All right. Welcome, everyone, to the relaunch of the Blockbusters podcast by Market Across. I'm one of your hosts, Itai Elizur, the managing partner at Market Across. Here we're going to try and talk to some of the, who we feel the interesting people in crypto, and talk to some insiders and hear their stories and where the market's going and the industry in general. And I'm very, very proud to host my first guest, Charles Dehousie. I'm still till today after this year's not getting the entire last name perfectly, but please, Charles, really briefly introduce yourself.
Thanks so much for having me. It's great to reconnect. We cross paths on so many conferences. We have so many interesting conversations, and having the opportunity to bring them to a larger audience, it's really a treat. So thank you for that. So my name is Charles. I'm with the dYdX Foundation. I'm the CEO over there. dYdX is one of the leading perps exchange, so we focus on crypto derivatives. So we are very much into the trading space with a very generous kind of dose of DeFi on top of this. I've been in crypto for some time. Before dYdX, I was with Consensus as head of Asia, so I worked a lot with the teams of MetaMask, Infura. I co-built some CBDCs with some central banks. And my early days in crypto came from the peer-to-peer file sharing. So before Bitcoin, there was back in the days software such as eDonkey 2000, LimeWire, or Napster, which was mostly used for exchanging movies and MP3s. And that's really the kind of experience which brought to me decentralized computing. And I think over the years, we've seen this kind of peer-to-peer computing evolving into blockchains and adding much more functionalities beyond file sharing only. So very excited to be here. I'm passionate about crypto. I've wrote 2 books on crypto. The second book is out this week, but I'm sure we're going to be able to touch on this.
Yeah, we're going to talk about it as well. So perfect. Thank you very much for the introduction. And I feel like a bit about your journey can almost show, I think, a bit of timeline into the industry as a whole and maybe forward thinking. So let's touch that a bit and kind of, I would say, get to where we are today. So you started in the more traditional spaces, as you said, talked more about the file sharing, the whole torrent world, again, BitTorrent back in the day, that, by the way, was purchased years ago by Tron and turned into decentralized application. So why did you enter the space in the beginning? So why did you, and again, as you said, Consensus pretty early on, what was that red pill moment for you, and why did you decide to put your career in a path where, and I tell everyone who's getting into crypto today, you might think it's hard for you today, but when I got into in 2017, it was really, really hard. When you got, it was completely worth selling drugs here to the world. So what was that moment, and why did you decide to pursue a career in this space and not just be passionate about it as a hobby or as an investor?
Yeah, absolutely. So I saw with Bitcoin this peer-to-peer kind of money narrative, but very early on it was just like possibly a dream, right? It's easy to look at Bitcoin today, but when you looked at Bitcoin 10 years ago, it was a very different type of opportunity and much more an experiment more than anything else. But what was very interesting was the people kind of walking around this idea and discussing and gathering, and you had this kind of crypto zoo, and we still have this crypto zoo somehow, with people which were like ultra liberals, people which were like cyberpunk. Some others were highly technical and only thinking about the technology. But I believe when really I decided to say, okay, I'm all in crypto and this is really what I want to do, is when I saw the business logics capabilities of Ethereum. So I spent some time on Bitcoin, and when Ethereum starting to bring the smart contract, which essentially allows you to put business logics on chain and get those business logics kind of autonomous, suddenly like the world of use cases expanded much more. And if you think about it again, for people which are not so familiar with our space, Bitcoin has only 2 functionalities, basically, even only one. It's send only. You can send some Bitcoin to someone. That's all you can do with Bitcoin, and there is nothing else you can do. It's a very strong use case. It's a very solid blockchain. It's a very simple story and narrative. But when Ethereum came in and put all these smart contracts and business logic capabilities on chain, the spectrum of use cases just expanded. And I think that was my moment when I realized that bankers were paying attention. When I realized artists at the time with NFTs were paying attention as well. When I saw the people from payment, from securities, when I saw people around me just investing in companies and use cases and entrepreneurs kind of popping up around this technology, that was not the same kind of excitement you will find around Bitcoin, because the technology of Bitcoin has only so much to provide. But Ethereum and the birth of Ethereum was really a haha moment for me.
Perfect. I love what Charles is. He's so good at this. You just give him the question and he goes. That's great. So I think it's actually a very good kind of way to get into the conversation. So what drew you a lot is, as you said, the decentralized business, I would say logic and smart contracts in general. And I think that a lot of us that got into the space initially, of course, did it also for financial reasons and saw opportunity, but mainly started through an ethos of decentralization. And that's what we thought is going to bring the mass adoption and be the main point of interest to what we're doing. And again, you then went to dYdX and you guys wanted to build a decentralized perp, I would say, environment. We're going to get to later, does the world want more tokenization than decentralization? And that's an open question. But from all the different, I would say, use cases that you looked at as someone who sat in consensus and was there for a while and really saw that, and we're going to talk about the Asia part in a bit. Why did you think that the perps space, as in very, I would say, hardcore infrastructure for advanced trading, this is not something that people just, swap or flip on their phone. Why from everywhere did you think that that's this place that decentralization is going to be a key differentiator?
I think back in 2019, 2020, I realized that blockchain could solve a lot of problems, but there was only so many people with money to solve those problems. And the people with money to solve those problems were basically in finance. So anything around DeFi was essentially bringing a massive amount of value in terms of speed, reduction of cost, just new experience around money. And that's why I decided to essentially kind of narrow down my career and focus within the industry on the DeFi use case, because those are essentially the most established use case. And why are they so established? Because blockchain and crypto is solving problems, and people in the finance industry are highly competitive. They also have budget to basically invest and experiment around solving those problems. If you look at use cases around identity, those are really great potentials, but they are not solving very big enough problems for those practitioners in art or those practitioners in government to change and essentially embrace the technology. So I think that was part of my journey to kind of find out like which part of the industry was sticking much more. And when dYdX came as a team, that was just an amazing opportunity for me to join some champions, but also people which were having like a very strong focus within the biggest part of DeFi, which is a crypto derivative. Perpetual trading is 10 times bigger than spot trading, as well as a very strong focus on really looking at decentralizing and creating a new type of infrastructure for this trading of perps. So it was a very good combination of working on the largest market in DeFi, as well as essentially developing an app chain, innovating in terms of order book, and keep pushing the limits of innovations in terms of decentralized finance and crypto derivatives.
As we said, this is not again, perps when it comes to numbers and volume are, I don't know, you know the exact numbers. It's a lot bigger than spot, that's for sure, in the entire world. I'm not talking about crypto. So in crypto, we kind of started differently as retail and spot and very, I would say, simple products came in. So you guys getting into the space, how did you decide if it's going to be more a B2B focused or B2C focused, and what were the first initial reactions when you hit the market? Because you were one of the trailblazers. Like today, we're going to talk about how the market has evolved and the hypers or whatever, but getting to those initial boardrooms and telling people you should not be doing what you're doing in a centralized manner, but a decentralized manner, and be dealing with these assets that are weird in cryptos or whatever. What was the initial I would say response you got from people?
Absolutely. So back in 2018, Antonio Giuliano, the founder of dYdX, left Coinbase, where he was an engineer, and decided to create his own project called dYdX. Very, very early on, the focus has been on perps. Perps was at the time very successful. It was the early days of perps, and perps as a product, perpetuals crypto derivatives, were created in a centralized manner by BitMEX out of Hong Kong, by Arthur Hayes, Ben Dolo, and another co-founder. And that was a tremendous success. But I think dYdX got the vision in the early days that eventually those centralized venues for the crypto assets will eventually give space and larger and larger space to decentralize as soon as the technology was ready. So the first iteration of dYdX was actually on Ethereum layer 1, but those experiments had to basically very quickly evolve because at the time the gas fees on Ethereum layer 1 were just way too big. So very quickly, the team kept on kind of scanning and mapping the technology available around Ethereum layer 1 to see how they could expand and keep delivering on this on-chain version of perps. Came in Starkware and Starknet. So dYdX was one of the first users of layer 2, one of the first user and customer of Starkware as well. And it was just a great kind of space for dYdX to evolve. And from 2018 to 2021 or so, the growth of dYdX has just been tremendous. At the time, dYdX was almost the only player in town when it was coming to on-chain perps, and it was leveraging the best technologies available at the time on the Ethereum layer 2. A little bit later on, dYdX kept evolving, the market of dYdX kept evolving as well, and it was time essentially for dYdX to rethink a little bit the engineering and thinking how we can essentially migrate away from general purpose blockchain to what we call app chain. An app chain is actually a chain which is dedicated to a single app and dedicated to a single use case. So instead of building your project on a Swiss knife, which can do a lot of things but only so far, you essentially migrate to a Formula One, which you basically fine tune for the best execution around your use case. So in 2023, dYdX launched his own blockchain, the dYdX chain, which allowed dYdX to decentralize further, to improve the throughput of the chain, improve the type of order types on the order book, and essentially improve the performance and the UX for the users. So that was really how the kind of business case and infrastructure evolved. And I think to come back to your question, from day one, dYdX focusing on perps. Perps are very sophisticated type of products. It's not for your sister or my brothers. It's not spot where you decide if you buy or sell. Perps are for much more institutional type or sophisticated type of users where people can express their opinion going long or short in a synthetic way. They can add leverage as well. So it takes much more, I will say, thoughts into taking a position as well as monitoring the risk while the position is on. So it very naturally, the dYdX, I would say, user base went to sophisticated users, institutional, think of market maker, hedge funds, crypto whales. And then I think those crypto whales and those early users of dYdX quickly understood that there were a number of risks when they were trading on centralized venue. They were essentially losing the custody of their assets. The order book on centralized venue was very questionable from time to time. And it just made a lot of sense for those traders to essentially migrate into decentralized venues like dYdX, where transparency was way larger. Security was also not a concern. And think that along this journey, you had the FTX drama, you had the BlockFi drama, you had all kind of industry dramas where the DeFi serious and diligent builders like dYdX have been shining over the years just by deciding to build properly an infrastructure. And also maybe Itai, I'll double click on this, and that's important. You're a man of market and a man of communication. I think within this journey of dYdX, there was some very deep thoughts about what is your identity. Is dYdX a centralized, decentralized, fully decentralized? Where are we sitting between the DeFi world and the centralized world? And as soon as the dYdX chain was essentially launched, dYdX went from a semi-decentralized system with the Starkware chain and AWS order book to a fully decentralized system on the dYdX chain. And I think with our industry maturing, it's very important for projects, should they be a DeFi project or CeFi project, to have a very clear opinion and a very clear position on their identity. Are you sitting on the DeFi side? Are you sitting on the CeFi side? And how does the product reflect that? I think people which are unclear about that and label themselves DeFi while running in a centralized way for a part of their business are sitting between two chairs, and eventually this is not going to play out well.
Perfect. You're walking great, exactly where I want it to be. So, as you said, I've been around a bit and do a lot of conferences and panels. And one of the questions I usually ask when decentralization is part of the subject is, do we feel 7-8 years into it that the actual clients or users of these products really champion decentralization as one of the main things that they're looking for as users? And then I kid and say that I don't think people want to drive a decentralized car or go to a decentralized hospital or things like that. And my question to you today is, as on the founder side and on the infrastructure side, and maybe on the, I would say, first round of Bitcoiners or crypto people, decentralization seems to be why we're here. I think that today it's more about the digital assets and tokenization. But how much is decentralization something that you feel that users of all kinds, that could be B2C and B2B, actually see as a value prop and more maybe as a feature that could be good or could be bad?
The vast majority of users don't care until they care deeply about decentralization. The users of FTX did not care about decentralization until they started to care. The users of Mongox, who lost as a group 600,000 Bitcoin, did not care about decentralization until they cared. So I think there are so many different cohorts of users coming into crypto, and everyone is having this kind of journey. Some people and some builders of the latest generations of crypto builders are essentially embedding the benefits of decentralization without complexifying and not making it a feature they advertise, but just like a feature of part of their security and value proposition. But I think as well that the spectrum of users has been evolving. So if you ask me, Itai, is a retail users of dYdX caring about decentralization? I'll take the assumption they don't really care. Is a market maker or is a hedge funds deploying hundreds of millions every minute on dYdX? Do they care about decentralization? They highly care because they really want to understand and kind of frame the risk they are taking when coming to a decentralized venue like dYdX, or when they are going to a decentralized venue like a centralized venue like Binance. So I think we see a much more well categorized base of users, but I would say some people remain totally ignorant about decentralization, and they simply have no appetite to learn more about it. And some others are starting to paying a lot of attention, and they really go into the details because they are deploying much larger amount of capital. And I give you an example. A few weeks ago on October 10, we had this Black Friday event, and obviously there was a lot of chatter within the trading world. And what I found after a few hours within this kind of industry drama, I could very quickly and very clearly identify users. Usually they are power users, like large professional hedge funds or trading shops, which really understood and really leverage the transparency of DeFi, understood all the deleveraging systems and how the order book works. And there was another category of users which were just like walking in the park and being caught by the rain, so to say, right? So I think our industry is evolving. Not everyone care about decentralization. Not everyone care how this computer we are using today is working. Some people which are professional like you and me will know the basics and make sure that everything works properly because they understand how it works. And some others will just connect and do their thing. So this is an ongoing conversation. And when it comes to the asset, like, is it important for an asset to be decentralized or not decentralized? We can ask these questions when we look at the ETFs, when we look at the Bitcoin ETF, which owns several percent of the total amount of Bitcoin in circulation today. When we look at the Ethereum treasuries, for example, like Bit Digital, like the one from Joseph Lubin or Tom Lee, which are owning a larger and larger number of ETH as well. I think, again, this is a spectrum, and I feel that the industry will be essentially self-regulating itself because the regulators also are around us. I don't see Tom Lee owning like an unlimited amount of Ethereum. I think he has a clear kind of target in terms of how many Ethereum he wants to own. Same for Joe Lubin. They don't want to be caught like influencing too much those networks and essentially kind of killing the benefit of decentralization because their size become too big.
So you just said what I was going to say. Actually, what's great with this, I would say that the industry kind of polices itself. So I think that I'm a pretty cynical person, and I know to be cynical, and I would say even critical when needed about this industry. But I do think that when you actually look under the hood and put away just the memes and the whatever, it's amazing to see. First of all, I would say, as you said, that the industry almost polices itself, and you see the cycles just happen very fast. First of all, even talking about the success of the number of companies, how much fail or not fail. If you look at the general startup world, maybe 2 or 3% of startups even, I would say, reach round B. I'm not even talking about winning. So, and again, in crypto, we just started with ICOs. I don't know if the numbers were better or were worse. We just went to get money from the public first. So it was very visual on the beginning. And then let's talk about DeFi. Yes, DeFi sounds amazing, but the first, of course, iterations, and it only took 2-3 years. It doesn't need decades in crypto, but yes, it was the Terra Lunas, it was these crazy returns or whatever. Now, I think the discussion is much more on what Vitalik is talking about, which is like sustainable DeFi, and things that are pegged to dollars and the more creation of things around that. Do you agree with me that the industry is, I would say, maybe very dichotomatic, but it also cleans itself out pretty quickly? Let's say a year ago was all about these different airdroppers, whatever. Now we're already understanding that that's not the best way to do things. So how interesting is that, even as a marketer or as a founder, to see that there's a lot of, I would say, you see human motivation and you see things happening, but we kind of, the cycle really almost like it replaces itself when it comes to the tactics. You got what I mean?
Absolutely. Eventually, we've got more and more people around the crypto industry. And this is just a sign of success. So what it means, if there are bad apples within this industry, they get less and less attention, less and less funds around them, should it be scams or anything else, just because the pie is growing at an exponential speed. One phenomena to illustrate what we're discussing here is what I call the fintech by crypto, or this crypto meme, where you see a guy with a mustache and the crypto amulet at the back, and it says fintech in the front and crypto at the back. I think the projects like Morpho integrating lending into Coinbase, or when dYdX integrates together with Crypto.com and brings essentially DeFi perps to the Crypto.com wallet community, it really shows how there are some new rails and new ways, centralized crypto as well as fintech essentially connecting with, on the back end, having some crypto rails. So it's really showing that even though the industry is not yet perfect, it has reached such a size. We also have now a large number of licenses which are available, which are helping to keep away like the scammers. So a number of things are getting in place to help this essentially industry to keep growing stronger. keep in mind as well that in last August we've got like this stablecoin wave starting in the US with the Genius Act. So this means more banks issuing US dollars. I think this will ripple into Europe and Asia, and I think more involvement from TradFi, more discipline from TradFi coming into our industry and just helping us to grow stronger. So if you go deep into crypto like you and me, we can still find corners which are extremely ultra liberal and cyberpunks, but we also see like a very much a wave of growth for our industry with newcomers, which are either newcomers into crypto or people integrating crypto into their fintech experience for their users, and this helps to rebalance things and eventually grow the pie. If the ETF were not here today, we would not be at $110 for Bitcoin. If the ETF were not here today, as well as the treasury companies, ETH would not be at 4,500. So all of these are kind of supporting the ecosystem, but it also comes from time to time, depending where you sit on the table, with a little bit of concessions in order to make progress as an industry.
Perfect. So we talked about decentralization. I think it's a great ethos, and that's why I got into this. But the other part is the tokenization, and tokenize everything, as they say. And of course, now we have a very more I would say, digital asset and crypto in general administration, and you see that being pushed. And we also see that, I would say, in the industry that you're in. So you're kind of, I would say, the first, I would say, big decentralized perps. Right now, it's one of the biggest sectors. We have huge players like Hyper getting in, and there was the new one backed by CZ. I forgot the name or whatever. How much of this trend do you think is being feted by the tokenization part and the airdrop and the whatever? And how much is this really, I would say, the pinnacle moment, and now we've passed that point, and now only up for I would say your sector? Because I can tell you that there is something a bit worrying about the fact that a lot of people are being incentivized to do a lot of these actions, and how will that end, if that makes any sense in the end?
Tokenization is real. Tokenization has been happening before our eyes for years, and we were not talking it this the same way. If you think of stablecoins are tokenization. If you think of USDT and USDC, essentially they are tokenizing the value of a US dollar, which is backed by different things, and put it on chain. Right now, tokenization and RWAs, or real world assets, are coming back into like a second wave of narrative and theme for our industry. People tokenizing stocks, tokenizing funds, tokenizing strategies. I think all of this is real. The one challenge, I think two challenges we have as an industry is, number one, we don't really have standards yet. When you tokenize US dollar, $1 is $1 everywhere in the world. So there is not much to debate around the value of $1. You can debate how you kind of collateralize it, but it's a very simple and straightforward asset. When you tokenize the shares of Tesla in one exchange, and you tokenize it in another way, in another exchange, then it becomes a challenge, because we used to be essentially dealing with one type of shares of Tesla. So if you buy it on Interactive Broker, or if you buy it with your bank, they will eventually connect to the same exchange as the American exchange and buy the shares over there. So there is some kind of standard in TradFi for company shares. There is no standard yet in crypto. So tokenizations without standard creates some problems. So the way those shares are tokenized differs depending on the venues. The way the liquidity is being created behind the venue is very different as well. So if you buy a Tesla share on Ondo Finance or Kraken or dYdX, it's also all kind of different things. So I think this is one of the challenge. And the other challenge also is beyond the standardization of tokenization is how far goes your tokenization. I'm excited about people bringing in the tokenized version, trading strategies or funds, and going as far as essentially getting those tokens and embedded into DeFi, so you can use them as a collateral on Aave, for example, or do some additional things. And that's a value proposition which is extremely different and very much innovative versus just having a digital version of your Tesla stock or your BlackRock fund. So I'm excited about the people which are trying to create tokenization for DeFi and creating a very unique value proposition in DeFi, going beyond just the digitalization of the shares. So standards and true and unique value proposition for tokenized shares or tokenization in general, I think are the main ingredients for the success of this. But this is coming, this is happening today, not in the same size as people would expect. But when I look at the success of stablecoin, I'm extremely bullish when it comes to tokenization of shares or trading strategies or investment funds.
So we're getting into the last part of the podcast, I would say the last third. And I want to talk more about how we can see these trends also, I would say, on a more global level. And where is this happening? So I feel like it's safe to say that a lot of crypto's first adoption, especially on the user level, and on the asset level, was based in Asia. So if it's big Bitcoin miners in China and in retail markets in Korea, and financial centers in Singapore and Hong Kong. Charles, I know that you started your career there in the beginning. So why would you say that Asia was so open in the beginning, I would say, to crypto? I was told that, let's say, Japan had almost 2 generations of zero interest in the banks, and they were looking for ways of creating new, I would say, wealth. But why Asia in the beginning, do you think? Why did that happen?
To cover these questions, I will definitely do a parallel between fintech and crypto. Fintech has been historically extremely successful in Asia. The reason being the population was overall younger, and the population was also essentially kind of leapfrogging in terms of infrastructure. So there are billions of users in Asia, should they be in Indonesia, in China, or Southeast Asia in general, which never enter a bank. They just open for the first time a payment app account, and then this payment account essentially evolve into a bank later on, or a loan or a mortgage. But it's a part of the world where there was no legacy, so eventually they just got used very quickly to very efficient and modern and digital finance. And when crypto came around in 2018, 19, and up to 2021, essentially Asia offered a very wide population, very open to this innovation around finance, not having some kind of trust issue with a digital format of money and digital format of finance, and that creating just essentially a hockey stick type of growth. Later on, Europe and the US kind of caught up because the industry of crypto eventually found some very unique value proposition and some differentiation factor versus traditional finance for crypto. But in Asia, it really all started from this kind of push forward of fintech, and then crypto could kind of jump on the wagon and catch up and onboard within our industry millions of users over there.
So we saw that blockchain and crypto saw a first adoption, of course, in Asia for the reasons that you just talked about. But as the market evolves, we see new markets evolving. Of course, United States now seems very bullish, I would say, because of the current administration. But I do want to touch about your book and something that you just published recently, your second book that's also where you live today, which has to do with, I would say, the UAE and the Gulf region in general, which seems to have become kind of the global leader and pusher in digital assets, and some might say in innovation in general. And there we see an interest that's much more deeply rooted, not only in the people, but in, I would say, the leadership in general, and something that looks a bit more sustainable maybe than the current short-term interest in the United States. So tell me a bit about that market and what drew you so much to write a book about it.
Absolutely. I think you're perfectly right here again, Itai. this industry of crypto has been very agile and moving places. So as you mentioned, there was a very, very strong start in Asia with a Bitcoin miner, with the early days of Ethereum and the crypto space in general. But then as the industry matured, it was kind of looking for places where they will be able to get like proper banking relationship, and why not licenses to operate and grow with more certainty about how they will be considered by governments. And in these phases of growth, we've seen the largest players in crypto, should they be centralized project, decentralized projects, or investors in general, kind of country shopping, if I may. There was some people which were expanding in Hong Kong and Singapore for some time. Europe has been trying to kind of attract, should it be in the UK or in continental Europe, as many players as possible. And the US recently reopened and gave some kind of fresh air for all this fantastic base of American entrepreneurs, and I'm very, very happy to see them kind of shining again and having space to grow, because they've been under like very heavy pressure for many years. So it's a long way to tell you that this industry is kind of evolving. It's a global phenomenon, but those companies need to find the right places to anchor. As you mentioned, I relocated after 20 years in Asia to the Middle East. I live now in Dubai, spend a lot of time in Abu Dhabi as well, the state just next to the Dubai state within the UAE. And what is just mind-blowing to me is to see the number of top executive founders projects essentially relocating to the UAE and operating sometimes with thousands of employees and offices within the UAE. So what we try to cover together with my co-author, Jem DiBiasio, is essentially how this ecosystem of crypto in the UAE, which is fairly recent, find its positioning within the global industry, and eventually attracted a lot of different entrepreneurs and companies as well there. So the way we kind of frame the book was to interview major entrepreneurs and CEOs out of Abu Dhabi and Dubai, and understand why did they came to Dubai or Abu Dhabi. What was the journey? What kind of surprises, good or bad, they got when they expanded here. So we had the chance to speak to regulators in Dubai. We had the chance to speak to the CEO of Deribit, the world's largest player in the world of crypto options, the founder of Polygon, the founder of Symbiotic, the top CMO at Binance, CEOs of wallets, multiple kind of profile within the industry, and trying to understand like why and what makes them came to the UAE. And the takeaway is that eventually, even though the world is changing very much, we are into a kind of a crisis moment right now, between wars, tariff, and all kind of things. Some regularity, some clarity around the regulations is coming step by step, but not as much as people will want. And what we've seen is regulators in ADGM Abu Dhabi and VARA in Dubai have been extremely active, creating some kind of modern crypto licenses, which are extremely demanding. Having a license in the UAE is not for everyone. So if you're a cowboy, please do not apply. You have absolutely no chance. That's coming very clearly from the interviews we got with entrepreneurs in the UAE. But eventually, when you get licenses and you have the chance to operate from those places, you really get a new generation of license, which allows you to essentially shine and grow more globally. That some of the licenses offered in the old world, where they will essentially tell you like, okay, this is only for this domestic market only. So it's a very interesting way for you to explore the region. So if you're a crypto executive or a crypto CEO, investor, or entrepreneurs, and you're wondering about the UAE, and I really invite you to take a read at Arabian Crypto. It's out this week. And hopefully it's going to give you a sense of what was the journey of some of your peers, and help you to get a more documented opinion on the region.
Perfect. So actually, you touched something I wanted to say. So I think it's very clear that there's the regulation is a bit more, I would say, founder and I would say DLT positive in general. Taxation also helps, but as you said, they're not just going around and giving people money. And I think that that's something that people thought, that there's like all this oil money looking to just deploy itself into all these cryptos. And how annoying is it to see a bunch of, people? I'm sure there's a fair amount of people that just come in and think that they can waltz into it as much as the same maybe type of people that thought that they could just walk into any event in Korea, and I know it's soccer moms and it will start throwing money on them or whatever. What's the maybe do's and don'ts of people trying to enter the market, and what should they not expect to get? Let's put it that way.
What you can expect to get is no tax on your personal income. That's very simple. No tax on capital gain, no tax on your salary. So that's something everyone can get. It's extremely straightforward, it's clear, it's simple. When it comes to operate your business in the UAE, you need to properly register it in the right state with the right licenses. If you don't follow the rules, you will get exactly the same type of problems you will get in Europe or in the US. If you operate in a non-legal way your business in the US or in Europe or in Asia, at some point the regulators come to you and say, hey, I'm sorry, we've got a set of rules here and we would like you to oblige with those rules, so pick the license which is a better fit for your business, but get a license. So you need to have licenses in the UAE, that's very important. But what is interesting is they are essentially offering a spectrum of licenses which is a little bit larger and covering some of the modern types of activities. So I would not be surprised to see in the coming quarter some DeFi licenses dedicated to DeFi project, which is extremely hard, but very interesting in terms of business. And this competition between different cities is very interesting when you've got regulators engaged, the way the UAE regulators are. I think the region is ambitious. The region is also high integrity. So when it comes to the crypto industry, they want to make sure they don't get kind of polluted by bad apples. You don't have more bad apples in the UAE than you have in Hong Kong, than you have in London or in New York. It's basically the same type of pattern. But what I can tell you for sure is here they are really building and betting big on crypto. It's not an opportunity for them. It's something they really want to succeed. And I give you one example to close on this, Itai. In many parts of the world, when crypto came surfaced from the industry, essentially the regulators kind of play the hot potato between the banking regulators and the securities regulators and the commodities regulators, like who is in charge of crypto? I'm busy already, I don't want to take care of those cowboys. And what they did in the UAE was totally different. Essentially, the leadership in the UAE said, okay, there is something happening with crypto. We saw some of our peers in different parts of the world trying to make crypto fit into the securities regulations or fit within the banking regulation. And the decision made here in the UAE was essentially to create from scratch an independent regulator only for the crypto activities. And this happened to be extremely efficient. It's a dedicated team. They design their whole framework of regulations. They rate those regulations regularly. They monitor their client activities on chain. They do a bunch of things which I've never seen in any other jurisdictions. And as you know, I spent some time as a government employee, as head of fintech in Hong Kong before joining Consensus. So I've seen different ways of working within the crypto space from the regulator side of the table. And here it's a very modern and refreshing way. So in short, if you come to the UAE, you will find a very young country, which is somehow can be compared to a mini USA. The vast majority of the people living in the UAE are immigrants like me, coming from overseas and building this new nation. And from the government side of things, you will find regulators which are very busy, so much they have demand, because they're offering a modern framework around crypto regulations. And you will find also some of the top executives globally, should it be in fintech, in DeFi, in CeFi, living in Dubai or Abu Dhabi. So in terms of networking and BD, you get access to really some of the top profile people. out of a conference, you can get them for possibly a lunch, or why not a morning ride in the desert.
Perfect. Great. So let's just finish with where people can keep up to date with you. Where can people get the book? Where can people maybe, I don't know what, ask advice on these matters? Give us the contact points.
Absolutely. Thanks so much for having me again, Itai. So first, if you want to follow dYdX, you can follow dYdX on X and all social media at dYdX. You'll find me as well as Charles Dossi. And if you want to know more about the book, please go to Arabian crypto.xyz and you will get everything, the links to buy the ebook, the paper version, and register as well to our newsletter.
Perfect. Charles, thank you so much.
Thanks so much, Itai. Thank you so much.